All right, I want to go over the 3 secrets to really mastering price action and price action trading in Forex. So if you're someone who's been struggling with price action, or even someone who's wanting to get better and get to a whole new level when it comes to price action trading, this video is going to be very important for you because these 3 secrets are going to change the way you trade. So welcome to this channel. This is Wall Street Moses, and basically the whole format of this channel is to help people that are brand new to trading, experienced, or even intermediate get to the next level when it comes to trading in all aspects in all financial markets, whether it's Forex, crypto, stocks, commodities. We're here to help you get to the next level. Now, I know Forex trading in particular, or trading in particular, can be something of a new experience for you. So if you really want to learn how to trade these markets correctly, like and subscribe to this channel. Make sure you turn on notifications for any new videos, and you'll be able to take the very newest information that's given out and be able to apply it immediately to get the fastest results. So let's get right into price action trading. So price action trading is basically the art, I call it an art of knowing what the candlesticks are telling you. You know, it's not based off of reading indicators. It's not based off of gimmick strategies. It's based off of having and being in tune with the markets and having an understanding of how the markets work by what you're seeing on the charts. You know, price action is not guessing based off of one candle, but it's taking the whole layout of what's going on in the markets and getting a flow for what the markets is feeling and what the market's sentiment and momentum and trend are doing. So this is how the master price action trading. So we're gonna break it down to real simple things. So secret number 1 when it comes to price action trading is candle flow. And candle flow just basically means seeing what the candles are doing in the moment. So if you're looking at this market here, this market is GBP USD on the 1 hour. Now, if you were to kind of go out a little bit, maybe go to the 4 hour and see what the markets is doing, you see that the markets have had a pretty big uptrend for the most part. And now it's down to a downtrend, but the candle flow is showing you what the markets are doing right now. So it's not basically taking off too much past data. It's taking what's the most recent amount of data. So for that, you got to zoom into what's going on now. So what you see with the candle flow of the chart is that at this area here, the market tried to reverse the trend. And you see that it created 3 strong bullish candles and followed by a retracement and then another strong move up. But what happened was, in all, that was a pullback for a continuation in the end. But look at the way the continuation formed. The continuation wasn't a series of moves like this where you have strong candles, but what you see is you see one strong candle, but it's immediately rejected. And you see a series of smaller downtrending candles going into a new low. So if you look here, this is where the old low was. And then a new low was formed, but it wasn't formed with candles that had a really strong sense of direction, but it was more so, I kind of call it streaking down a little bit, just steadily going to a new low. Not necessarily what you would call price and momentum. So how do I know that it's a slower downturn and it's not a strong downturn, or this is a weaker downtrend? This is why. If you look at, let's start with these sets of candles here. If you look here, you're seeing that doji candles. So dojis are basically candles with really long wicks that are bigger than the body. Now, I'm not going to go over a whole chart simple. I want to keep this video simple, but doji candles are creating new lows. These are not These are not candles that are decisive candles. These are indecision candles. So basically every time frame, in this case would be the 4 hour, are printing candles, and dojis represent a price battle or a battle of control between people who want to sell and people who want to buy. But you see that with these doji candles, the sellers are winning, but not by much. Then the bulls make a comeback with this candle, but the sellers continue to push down the market. But these still is a slow push down. So this is kind of understanding what the chart flow is. So you're just looking at the candles and reading by what candles are being printed after each other and being able to tell the story of what's going on. Even though the bullish, the bearish market, continue on, look at how it was formed. There wasn't a candle that was bigger than this bullish candle, but the bearish candles in concession are candles that are pushing the market a little bit down. So what does that tell you? It tells you that there's bullish sentiment present in the market, but right now the bears or the downward trend is still prevailing by a small margin. So you got this bullish candle here. You got this wick up here, which tells you that this was once a strong green candle, as this is where the price opened. At one point, it was up here. So there's bullish momentum there. Even in this strong downturning candle, there was bullish momentum when you see this price movement. And then now it's followed by more dojis and more dojis. You get some strong bearish candles here, but each bearish candle is rebounded upon right away. So this is reading chart flow. I'm doing it live so you can see how it's done. So you see that there's wicks at the top side, wicks at the bottom side, trying to reject the price. So basically, look at this candle here. This is a really good instance of candle flow. So a price opened here. It went up for a little bit, then it sold down, and then the bullish or the buyers come in and try to push the market up. And they push the market up enough in this time frame to keep this candle from being a decisive candle like this one. But look here, even if this candle was decisive, you see how the buyers immediately responded to this move by the sellers. So you have that going on right away. Now let's zoom back out. That's just, I'm verbalizing it, but when you really understand candle flow, you'll be able to look at it and see that in a faster pace. Now you see this move here. Now let's go to the last, day of price action. Let's zoom out just a little bit. So you see that there's this last bearish rally here. And then this bearish rally wasn't followed up by any consecutive movement downwards. So what does that tell you? It tells you that this was kind of like their final move. Like say we look, let me show you from where I'm talking about. So if we look at this bearish candle here, then you see these dojis, and you're seeing that this is consecutive dojis, and what you're seeing, you see a neutral doji followed by a selling doji followed by a bullish doji. Now with the candle flow, now you're seeing that the market momentum is slowing down and slowly starting to shift in the other direction. You play it a little bit, and you get one little rally down, but it's immediately rejected. So this candle would be a strong indication of this. So this kind of went too fast. Let me go back a little bit. So this candle right there, see how it was a white candle and it was immediately rejected, and it closed above highs of these dojis. It closed above it. So what does that tell you? That tells you that momentum is shifting the other way finally, because as you see here, nothing closed higher than the other one as far as like 2 consecutive candles. So in these last 2 days of price action, there wasn't a candle that closed higher than the last 2 candles. So looking at candle flow, this becomes significant and the move continues on. And you get that movement there. That's understanding candle flow. Now, the second secret of price action is understanding the TSM method. And TSM, let me zoom out again. TSM is basically going to stand for trend, structure, momentum. This is secret number 2, TSM, and understanding that analysis. So you got candle flow, and candle flow kind of goes into the momentum side of things, but you do want to understand it as a separate entity. So let's go right into it. So trend, of course, is understanding where the market is trending. So a lot of people use like trend lines, even though I'm not a huge fan of trend lines, but a lot of people use trend lines to visualize it. I'm not a huge fan of using trend lines as support and resistance, but visualizing a downtrend just without indicators is helpful to use them. And then you have, so you can obviously see, because price is coming from the upper left to the bottom right, that's a downtrend. The price is coming from the bottom left to the upper right, then that's an uptrend. So you got trend here. So you understand that the trend on the 4-hour is downwards. So this is how I kind of do it. So you have your trend, structure, momentum. So trend is down. So now you got structure. Structure is basically points in the market where price reacts to or creates turnarounds from. So if we go back a little bit, a strong price point or a strong level of structure would be right in this area. And if we move it down just a little bit, that gives you a great level, because you see that price continue momentum from here. It rejected off of here. It keeps rejecting off of this point. And then when it's finally broken, it takes a strong candle to break it. So that's even if it breaks, because all structure points don't stay, valid forever. But when you have a good one, even when the price structure is broken, you want it to be a strong candle. In this instance, this was the candle that broke the price structure. Another way you can find price structure is if you can make this a line chart and you just simply look for an area where price is common, and meaning common as in it keeps going back to that area and rejecting off of it. So you see that if you were to do this analysis of finding a structure, you got this point there, move this down, you got that point, this one. So you got these strong areas of price in that area. So that helps you identify a strong structure point when you do it that way. So when you go back to the candles, you're not as confused and you see it on a more clear level. So let's move on. So the other part now is momentum. And momentum is what directions are the candles going in this particular moment in time. So let's close this out and then let's go here. So if you look at the current price action of the market, the current price action is downwards. So structure is downwards because price is making lower lows and lower highs. So you see how price keeps going lower. So that means the structure of the trend, the structure is matching the trend. It keeps going back to these points. And another way to use structure in trend is seeing if the floor becomes the ceiling. So what I mean by that is See how at this point, this structure point was the floor. But once it was broken, it becomes the ceiling for price above it. Because if price is above it, of course, the ceiling, floors are not above you. So structure is down because floors are becoming ceilings. That's an easy way to understand structure. Now, momentum is where candles are going right now. So now if we look at the last few candles, you see that the momentum of the market, you see how the candles are closing higher than the last candle? Momentum is going up. So if you have if you're analysis or analyzing a live trade, you would simply just go based off of, trend, structure, momentum. If trend is down, structure is down, but momentum is up, you don't have a trade because that analysis is incongruent at that moment. And that's what's going on right now. Trend is down, structure is down, but momentum is up. So an incongruent analysis means no trade. Now, the last principle is vector wick levels. And vectors are points in the market where you see a bunch of wicks. So and vectors are usually formed on the 30-minute to the 1 hour. So I'm gonna go down to the 1 hour and I'm gonna find you an easy one so you can see what I mean. So a vector would be something like this right here. So see where these wicks are here. You fix that and zoom in. Vector wick levels are points in the market where wicks continually form in a congested area. So you see that one right after another, wicks are being formed in this area. So understanding, and this can be a really good confirmation tactic to understand when to get in the market or when a level is being respected truly, when you see vectors in the level. And even here, when price was going up for a little bit, you see that these vectors are here. And then as far as, because this usually is a question I get, if you have areas where wicks are on the bottom and the top, well, the wicks, you go by which side has the longer wicks. So you see how this is longer, this is longer. This one is the one that's not longer, but the majority of the wicks on the upside is longer than the wicks on the downside. So you would pay attention to the wicks on the upside. That's how you can tell, even in a more indecisive market, which way to place your bet on. So using these three levels, understanding price action, and using these three secrets will change your entire way of trading. So I hope you got a lot of video from it. Please like and subscribe if you got value from this. And tell me, what was your biggest takeaway? Put it in the comments what your biggest takeaway from this video was.